Okay, so just a little bit about us real quick before I really get started. That's my dad, JJ. Obviously, I'm Cooper. He has been a CPA for 33 years. The current firm we're at right now, he has opened 28 years ago. I joined in the practice about 5 years ago, and about 3 years ago, 3 years ago, we started specializing just in real estate. So he has a YouTube channel that you could, this clicker is not gonna work. He has a YouTube channel. We have some of this stuff, DIY, how to get an LLC, EIN, everything you can think of, tax deductions, stuff that will actually even benefit your clients about knowing. Have over 100,000 subscribers at JJ the CPA, is that YouTube there. All right, so taxes. If you guys are gonna remember anything leaving here, I want you guys to remember this. LLC as an S-Corp, 15.3%, receipts and mileage. If you're gonna write anything down, write this down. I also want to just make you guys aware of, Dad, this isn't how many days there are until April 16th of 2026. I think yesterday was 125 days, so today would be?
155 today.
Okay, 155 today. But in 155 days, you could potentially be writing a check. And you probably are writing a check, just given the business that you guys are in. We say as a realtor, your worst tax move is to FSBO your taxes. You guys as a professional would never ever suggest that you're just like, no, sell it on your own. That's an easy house. It's only 250,000, whatever. You can do that yourself. You wouldn't do that, right? And that's actually one thing that we love about working with realtors is you guys understand the value of working with a professional, because in every single transaction that you guys have, you work with probably at least 4 to 5 professionals. So bringing another professional in, you guys understand that value. If you have a best tax move, like I had said, to write down, LLC taxed as an S-Corp. And we'll go into what that is. If there's anything, well, actually, I'll ask this real quick. How many of you guys have an LLC that you use for real estate? Okay. If you don't have an LLC, I suggest you go home and get one today. It is gonna be your golden ticket to then ultimately saving 15.3% forever. This is the first step of it. If you just talk to any entrepreneur and they're gonna open up a business and they just have the idea of this business, they're gonna go ahead and open up an LLC. So there's a misconception of, well, I don't make any money, so I don't need an LLC. Or I only make, $40,000, so I don't need an LLC. Wrong, you need an LLC. If an entrepreneur is even thinking about a business that's gonna potentially make money, the first thing they do is open up an LLC. You guys are business owners. You guys need to think in the same manner. So if you don't have one, you need to get one. Aside from it being a golden ticket to ultimately saving you 15.3%, it also is going to limit your liability. The other misconception is LLCs are how you guys are taxed. How are you taxed? Oh, I'm taxed as an LLC. It's a legal designation. You actually cannot be taxed as an LLC. What you can be is taxed as an S-Corp. To become an S-Corp, you have to have an LLC to then make that election with. 2 tax strategies that I'll go over just real quick if you guys are going to remember anything, and this was receipts and mileage that I just mentioned at the start. Keeping your receipts is just as important as having a business bank account. Statements are not receipts. They just aren't. It doesn't matter if it's a credit card statement, it doesn't matter if it's a bank statement, it doesn't matter if it's a transaction detail in your mobile app. It does not matter. It will not work with the IRS. Don't believe me? Read court cases. Every single audit that gets adjusted, 9 out of 10 times, they don't have receipts. What this receipt is worth, and then maybe this will incentivize you to keep these, every single time you keep that receipt, you now have signified that is 100% I'm gonna get to deduct this. This is gonna be a business expense. If you're at the highest tax bracket, 37% plus 4.75% here in Oklahoma, that every dollar on that receipt is gonna save you 42 cents. If you're like, well, I'm not in the 37% tax bracket, right? You're probably in the 22 or the 24, so it's gonna save you about 30 cents on the dollar. So every $10 you spend is saving you 3, right? Every 100 is saving you 30, but without that receipt, you don't get those savings. Mileage. If you are not keeping track of your mileage, you need to. Because what happens is you get to the end of the year, you have no idea, and then you tell your CPA that you only drove 5,000 miles for the year. And you're way wrong. Because the average person driving 9 to 5 to their office and back is probably driving about 10,000 miles a year. You as a realtor going from here to Norman to Moore to Purcell to Stillwater to Guthrie, you drive more than 10,000 miles in this year, but you will have no clue if you don't keep a log. Why it's important for you to track your miles? The IRS grants you a 70-cent on the dollar tax deduction for every mile you drive. So if you drive 10,000 miles and you have a log for it, guess what? That's a $7,000 tax deduction. For free. You don't even have to spend any money. All you had to do was drive and keep a log of it. If you're in the 42% tax bracket, that $7,000 saved you $3,000. So keep a mileage log. Our suggestion, Mile IQ, it's an app. As soon as you get in the car and start driving, it says, is this business or personal? All right, so I'm sure all you guys in here know this. Anyone been a realtor less than a year? Okay, awesome. Okay, you as a realtor receive a 1099 NEC at the end of this year, which I'm sure you guys all know. But what does that mean? It means you're a sole proprietor, you're self-employed. This also now means you are a business owner. When you receive a 1099, there's not taxes withheld from that pay. There is a 15.3% flat tax on whatever that dollar amount on the 1099 is, or the net income after expenses. All because you receive a 1099 and you are self-employed. It's called a self-employment tax. So every single realtor here, if you're not an LLC taxed as an S Corp, you are paying 15.3% more in taxes probably every single year. So the average realtor, just seriously combine the realtors that we have brought on, and they are not S Corps, they are probably paying roughly, on average, 42% on their income. That is on the net income of their business. If you made $60,000, you had $20,000 in expenses, you had a $40,000 net income, and you guys are in the 22-ish tax bracket, you would pay 22% plus 15.3% plus 4.75. That is 42% on your income on 40 grand, on 50 grand, on 60 grand. When really that should be taxed at about 10 or 12%. So, like I had said, when you're self-employed, you pay 3 types of taxes. Federal income taxes, max 37%. Oklahoma income tax, it's about a 4.75 flat, dang near. And self-employment of 15.3%. The S Corp that I keep mentioning, by having an LLC and getting it taxed as an S Corp, you now forever save 15.3% on your net income of that business, just by filing one form. So if you still don't think you need an LLC, I would think again, because without that LLC, you cannot even become an S Corp. If you don't have an LLC open in this year, you cannot be an S Corp for this year, meaning you are going to pay 15.3% plus federal income plus state income tax at the end of this year. So this is a real example. We all would agree you get 3%. Maybe we can argue you get 2.2%, 2%, depending if you're on a team or your broker fee, whatever it is. But if you sold 6 homes this year, pretty fair average price with 3% commission on each, give or take, your total commissions this year would be about $88,700. If you were to be on Schedule C and you didn't want to keep receipts and you don't have a mileage log, so you're not going to get any kind of mileage deduction, your tax on $88,000 would be $20,900, almost $21,000. This is no joke. If you just had $10,000 of receipts and you had a mileage log with 10,000 miles yielding a $7,000 tax deduction, your tax would still be $15,900, call it $16,000. If you become an S Corp and do nothing, no receipts, no mileage, just flat tax on $88,710, your tax is only $11,700. Almost 12 grand, immediate $8,000 in tax savings with no expenses. And that's just a flat 15.3% in savings. You keep the same receipts and the mileage log, your tax is only 8 grand, which is about 10% of that. So it went from about, 30% to about 10%. So your tax savings on that in total are about 12 grand. Which would you rather before the end of the year, right? These are real things. And if you're like, well, I didn't sell 88,000, great, 60,000. And the numbers still work. All right, so we are now, JJ is going to speak about the new tax law that has come into play this July. So I will pass this along